Good afternoon, everyone, and welcome to our home buying with HUECU. My name is Dominique Velger. I am the Community Engagement Specialist. Standing by is Daisy Familia, and I will introduce her in just a little bit. But first, I wanted to let you know that we're reducing the background noise for this webinar. And please use the Q&A feature to submit any of your questions. I know it says chat, but we're using the Q&A section. And of course, this recording will be on our YouTube channel, so you can rewatch it at your convenience. And that should be in a few days. And then we'll also have a survey at the end just to let us know how we did and give us any feedback that you have and any questions that we may probably didn't answer. Okay, just first, we want to talk to you about the credit union, the difference between a credit union and a bank. So we are not for profit. So as a member, you pretty much are a part of this credit union. It's like a piece of a life insurance policy, but you're an owner of it. We have a lot of different rates. We basically offer you the same thing as a bank: savings, loans, different fees, lower fees than a bank. And we provide a better service, and we have a better business model. We're good for the community. We do a lot of volunteer work for the community. And wanted to talk about the fact that back in the fall, we opened a new branch. So if you are in the Longwood medical area, stop by, visit us. We would love to have you chat with us and see if we can be of any service to you. And also in a few weeks, it's America Saves Week, and we will be hosting 2 webinars. One is debt repayment strategies, and that's on Thursday, March 2nd. And the other one is saving at any age, and that's Friday, March 3rd. So please feel free to register at huecu.org/America-Saves. We'd love to have you. And of course, today we're going to introduce you to your presenter. So I'm going to go off camera so you guys can really listen to Daisy do her thing. So Daisy has been with us for quite some time. And Daisy has been here for over 2 decades. She's assisting members within the credit union industry in achieving their financial dreams. And as a senior mortgage loan originator, which we call him here at Harvard University Employees Credit Union, MLOs, Daisy is committed to empowering her clients with the knowledge they need to make confident decisions when funding their financial goals. So she's had over 20 years plus experience, and Daisy is a trusted expert in the mortgage industry. And she's going to guide many of you through the complex world of mortgage loans so that you can make your financial dreams a reality. So Daisy, take it away.
Thank you, Dominique. Hi, everyone. Thank you for taking time out of your busy schedule to come to this home buying workshop. We hope that all of the information I will be providing here today is of help to you. Let's dive in. During today's agenda, we're going to be discussing the home buying journey, mortgage qualification, and the next steps that you may want to take in order to become a homeowner. Benefits of having HUECU on your team. You might be wondering what sets HUECU apart from other financial institutions. At HUECU, we are committed to building strong relationships with our members, and we want to make sure that every step of your mortgage process with HUECU is as seamless and as stress-free as possible. Which is why we prioritize personalized service and flexible communication options, such as in-person meetings, phone calls, and video conferences via Zoom. We are available during standard business hours and happy to meet outside those hours if necessary. We also offer competitive rates with discounts available for first-time home buyers, and our closing fees are transparent and reasonable. Additionally, our fully digital process allows our borrowers to complete their mortgage application process from the comfort of their own home. While we reserve the right to sell our mortgages, we currently service all of our loans, which ensures a smooth transition for our borrowers and minimizes the potential for confusion or disruption in making payments that could happen when a lender sells the servicing of a mortgage to another lender. Do you want to go back one, Dominique, to the current real estate temperature? Okay, thank you. So right now we are in a unique real estate market where interest rates are high, but home prices are gradually decreasing. Some experts are calling this market a you date the interest rate and marry the house type of market, where if a home buyer finds a property they love, which checks most of their boxes and is within their budget, they buy it. And the reason for doing this is because most homeowners know that when interest rates eventually drop, they can refinance their mortgage to obtain a lower interest rate and lower their monthly payments, which is what was happening in 2020, 2021, when interest rates were incredibly low. Location remains a significant factor in the real estate market. And while we are still in a transitional phase, there are fantastic opportunities for home buyers. There has been an increase in accepted offers at or below asking prices, even with lower down payments. Seller concessions are also making a comeback. And basically, seller concessions is when a seller incentivizes the deal by paying for the borrower's closing costs. However, the housing inventory is still trending lower, and there are a few reasons for this. One of those reasons is that there are not enough homes being built to meet the demand. The second reason is that many homeowners have been forced to remain in their homes and forgo downsizing due to the high living costs. And the third reason is that investors are buying lower priced properties with cash as soon as they come into the market in anticipation that they'll be able to recoup their initial investments by refinancing when interest rates drop. Can we go to the next one, please? Where do I start? And that's a question that I get asked a lot when I first meet with a client. When it comes to purchasing a home, many people start by browsing online listings on sites like Redfin, Zillow, or Realtor.com. However, I believe it is best to start by contacting a lender like HUECU to find out how much you qualify for and what steps you should be taking to become a successful homeowner. HUECU offers both pre-qualification and pre-approval services. And while these terms are often used interchangeably, they refer to two different things. A pre-qualification is essentially a verbal conversation that you will have with a loan officer to give you a general idea of how much you may qualify for based on your financial situation. No documentation is verified at that time. A pre-approval is a formal process that involves a deep dive into your finances, resulting in a letter that states the specific loan amount you are pre-approved for and includes a purchase price, a down payment amount, and an estimate of the loan terms that you may be considering. A pre-approval letter allows you to make an offer on a property. And typically that's what, when you meet with a real estate agent, they'll ask you, are you pre-approved to buy a property? Because they don't want to waste their time showing you properties that you may not qualify for, may not be able to make an offer on. At HUECU, the pre-approval is valid for 90 days and is free. If you don't find anything within those 90 days, you can renew the pre-approval or take a break if you want and renew it when you're ready to resume your search for a home. When considering a mortgage application, we may request a credit score. Typically, you can find your credit score either by looking at your credit card statements or services like Credit Karma. A credit score is usually one of the most important factors or criteria that lenders look at to see whether or not you are essentially a trustworthy borrower. In the mortgage industry, a score of at least 620 is typically required. And so if you have a higher score, the higher your score, the better it will be, especially if you're intending to put less than 20% down payment. So although a lender may ask you to obtain a copy, like an unofficial copy of your credit report and a credit score from a service such as Credit Karma, or again, your credit card company, the mortgage industry uses a specific credit scoring model, which is what will be used at the time of pre-approval. And this is part of the reasons why a pre-approval will give you a more accurate idea of your credit worthiness, and also will give whoever you present the pre-approval to an idea that you are a serious buyer. If you are planning to buy a home within 6 months, it is recommended to go for an official pre-approval. However, if you're not quite ready for a pre-approval, a pre-qualification is perfectly fine. We will also be looking at down payments when we consider how much you may be able to buy a property for. It is important to have a good idea of how much you can afford to put down, as this will affect your mortgage payments and overall affordability. For first-time homebuyers, coming up with a down payment can be a significant challenge, especially in areas with high home prices, such as Boston, Cambridge, Somerville, etc. However, there are government-sponsored entities like Fannie Mae and Freddie Mac that set standards for the mortgage industry, including the highest loan amount that a borrower may be able to obtain with a down payment as low as 3%. Typically, the requirement for that is for people that meet the low to moderate income threshold or first-time homebuyers. This year's limit is $726,200, which is significantly higher than last year's limits of $647,200. Let's say you are interested in buying a home for $725,000. With a down payment of $25,000, you can make that happen. Of course, some first-time home buyers may have between 5 to 10% down payment saved up for to buy a property. However, keep in mind that if you are putting less than 20% down payment, you will likely have to pay what is called private mortgage insurance, or PMI. PMI comes with an additional monthly payment, and its sole purpose is to provide insurance to the lender to recover what they have loaned you in case you don't pay. The amount you pay for PMI will depend on your credit score, the amount of the loan to value ratio, and the debt to income ratio. So the loan to value ratio is your down payment, your down payment versus the loan amount that you're getting. The debt to income ratio is your monthly income versus all of your qualified monthly expenses. For example, with a purchase price of $725,000 and a loan of $700,000, if your credit score is, let's say, 720, your estimated private mortgage insurance payment might be around, let's say, $373 per month. However, if your credit score is around 740 or higher, for the same scenario, your monthly private mortgage insurance payment might be around $292 per month. I know $25,000 might seem like a lot, but with a down payment of $25,000, you are purchasing an asset that is valued at $725,000. And real estate is still one of the safer investment options available when done wisely. The housing market has grown at a rapid pace in the past 10 years, and while it might not continue to grow as rapidly because of the current high interest rates, it is still expected to grow in the mid to single digits within the next years. Okay, so now can you go to the next one, Tiffany? So Green Path is a service that is offered to our members, and it's a free service. Just give me.
I put the information in the chat as well for other people to
Okay.
save.
I am so sorry. Can you go back one more? I'm sorry. I just.
Right here or more?
Yeah, this is fine. This is
Okay.
perfectly fine. Okay, so at HUECU, we have several products that we offer to our members. One of these programs is Home Ready, which is designed for individuals with low to moderate income so that they are able to buy a property with a down payment as low as 3% down payment. We also offer multifamily home financing, and our adjustable rate mortgage products allow for you to purchase a 2-family home with a down payment as low as 5%, which is a great option for those looking to generate additional income from rental units. We also finance homes in all New England states. With remote work becoming more common, many people are considering moving to places like Portland, Maine, Vermont, and other areas. And even if you relocate to these areas, you can still finance your mortgage with the credit union. For those people looking to purchase a more expensive home, we offer jumbo loans with a down payment of just 5 to 10%, depending on the loan amount. We will also review these options with you during the pre-qualification or pre-approval process in order to determine which program is best for you and your unique situation. It is also important to know that we also offer loans for vacation and second homes and investment properties. As part of your pre-approval or pre-qualification process, we will also be looking at your income. Essentially, what we're looking for is that your debt to income ratio is not more than 43%. And the debt to income ratio is calculated by looking at any items that are like monthly payments that are mandated by court, such as child support, alimony, separate maintenance, any items that show on your credit for which you do not pay off the statement balance every month, credit cards, consumer loans such as personal loans, vehicle loans, and student loans, plus your proposed housing payment, excluding utilities. When we divide those two against all of those items against your monthly income before taxes and deductions, we are looking that the percentage of those does not exceed 43% of your monthly income. So again, essentially any liabilities, so child support, anything mandated by court, alimony, separate maintenance, credit cards that you do not pay off completely every month, any vehicle loans, personal loans, and any minimum payments due for student loans, plus your proposed housing payment, so property taxes, homeowners insurance, condo fee, principal and interest on the mortgage, not including utilities, so not including electricity, gas, etc. When we add those up, divided by the monthly income of all applicants before taxes and deductions. The old rule was that essentially 28% of your monthly income before taxes and deductions cannot, basically whatever you were going to borrow, your housing could not exceed 28% per month. And for all of the other debts, if the number was 36%. Another way to calculate it would be whatever your monthly income is before taxes and deductions, that number times 0.43%. And that's your budget for all of your monthly expenses that will be considered as part of the mortgage process. Keeping those numbers in mind, it is essential that you do a budget to ensure that you can afford your mortgage payment, because you don't want to be house poor. So even though we're taking your monthly payment before taxes and deductions to see how much you may qualify for a mortgage, you want to keep in mind what else you want to be doing. Do you want to keep on traveling? Do you have childcare? Do you want to keep on contributing to your retirement account, etc.? Another important thing I should mention is that if you plan to use overtime, bonus income, commission income, we require that that income has been received from the same employer for a minimum of 2 continuous years. And the way we verify this is by getting a most recent pay stub for the last 2 years that shows a breakdown of basically the year-to-date income. If you are self-employed, we need to see that this income has been reported on your tax returns for the 2 most recent years. If you have student loans, we will be discussing your repayment plan because payments are expected to resume starting in June 2023. And those minimum payments for your student loans can obviously impact your monthly payments, like your overall monthly payments, which in turn will also impact your mortgage qualification. We do not recommend taking on new debt when looking to buy a home, so avoid making any significant purchases or applying for new credit while in the process of securing a mortgage. We understand that this can be overwhelming, but we are here to help you every step of the way. We will work alongside you to find the best mortgage solution for you and for your family, and we are happy to answer any questions you may have.
Let me know when you want me to move forward with the slides.
Okay, awesome. You can go to the next one. Thank you. So, as you saw earlier, so GreenPath is basically a great service that the credit union offers, as I was mentioning earlier on, and it could help you with budgeting. So when it comes to discussing mortgage options, many of my clients are often surprised by what they qualify for. Sometimes what they qualify, like when we do like from the number to the pre-qualification, they qualify for way more than they are thinking of, or vice versa. Based on their income, they may not qualify for as much. So it is crucial that you ensure that your monthly housing payment is comfortable and that it won't negatively impact your lifestyle. And so as a member of the credit union and part of the, basically the Harvard community, you have exclusive access to this benefit, which is GreenPath. One of the licensed counselors at GreenPath can go over basically your credit report, review your budget to make sure that you are comfortable with the payment and to help you calculate or determine what is feasible and what is comfortable for you as far as like the monthly payment is concerned. We can go to the next one, Dominique. So when looking to buy a property, location is very, very important. Sometimes a lot of experts say that it's sometimes best to essentially buy a property that may need some improvements in a not so great, it is in not so great condition in a good location than to buy a property that's fixed up and looking great in a bad location. And the reason for that is because essentially you can fix a lot of sometimes a lot of the changes that a property may need is cosmetic changes, like you may need paint, something as simple as changing windows, etc. But whatever investment you make in a property is in a great location, you're going to get it back. Whereas if you buy a property that's in a not so ideal location, it may be more difficult for you to try and sell that property, or it may not, you may have, like your commute may be really long, etc. So again, location is very important, Also try to decide what type of property you are looking for. Whether it will be a condominium, multi-family home where you own one unit and rent the other, etc. Because all of it, depending on the type of property you buy, all of them come with certain risks. With a condominium, you have to deal with an association. If you own the home, like a single family home by yourself, anything that may happen with the property is basically will be on you. And in a multi-family, you may be responsible for somebody else, but they also come with great perks. A condominium, even though you may have to deal with association, if you do your own due diligence, you maybe and make sure that everything is correct with the finances, etc. You don't have to worry about much because a lot of the maintenance, especially like the exterior maintenance, is performed by somebody else. With a single family home, yes, everything it will be on you, but you may not have to deal with neighbors, etc. And with a multi-family, you can have somebody else, again, if it's done correctly, to help you pay for your mortgage. You also want to be very clear on what features you desire. Like if let's say that you are buying a property and you have children, you want to make sure that you at least have X number amount of bedrooms, how many bathrooms do you want, etc. And you want to make sure that you are very clear on what are just simple wants and what are the must-haves when you're looking to buy a property. And this will help you significantly, especially when you are discussing it with a buyer's agent. We can go to the next one, Dominique. So when you look into, so assembling a team is very important in the home buying process. And having the right team in place could save you money. And it could be the difference between you getting a property at the right price or even getting a property at all, depending on the location or not. So when you are looking for a lender, you want to make sure that lender has the product menu that you need. Are you looking for a 3% down payment? Do they have that option? Are you looking for a jumbo mortgage with less than 20% or 25% down payment, etc.? But you also want to make sure that whoever you are dealing with, as far as like the representative of the lender, that they are available for you. That they're available essentially when it matters. If you need to make an offer over the weekend, you want to be able to reach out to your lender just to make sure that the financials of the transaction may work. Again, so when it comes to assembling your team for your mortgage or for your home buying, it is super important that you have the right team in place. You want to make sure that your loan originator is somebody who is responsive, knowledgeable, and available to answer your questions. Speaking for HUECU, so at HUECU, we offer a variety of mortgage products. And if we don't have what you need, we can refer you to another lender. Our mortgage loan originators are committed to exceptional service, and we are dedicated to finding the best mortgage solution for you. We try to work with you to understand your goals, answer your questions, and provide support as needed so that you can make an informed decision throughout your mortgage process. The next step will be looking for a buyer's agent. As you start your home buying process, finding a good realtor is key. Don't simply go and choose a realtor that is listed on the property you like, as they may not be the best fit for you. Instead, research and find a realtor that has experience in working within the community you are interested in, basically in working within the community you are looking to buy a property at, and who works full-time. You may want to ask questions about their experience, the past deals that they have done, to ensure that they are a good fit for you. please remember the commission that your realtor is paid, this is something that is paid by the seller, not you. And same thing goes for the seller's agent. So just keep that in mind when you are talking to your agent about how much you may qualify for. So one rule of thumb I always advise my clients to do is let them know how much you want to buy a property for and not how much you have been qualified for. Because again, the seller is the one that pays the commission. And you want to make sure that if you want to, let's say, negotiate on the price of a property, that you are able to do so. A good realtor can help you make an offer, understand the market, and potentially find off-market listing. And one way a lot of agents do this is, so if you find an agent that is within the location that you're looking to buy a property, a lot of times when sellers are going to put a property on the market, they may have an open house for all of the agents. And if your agent knows what you absolutely must have in a property, they may be able to get you into the property prior to the property going on the market. And that will give you a little bit of an advantage, because if the property is not going on the market, you may be able to offer either a lower price for the property or an asking price, or you may be able to also have the option to negotiate in order to perhaps have the seller pay for the closing costs, etc. So timing is of the essence. And that's why it's important to have an agent that is local to the community where you're looking to buy a property. And it's also important to have an agent that is available, works full-time doing this, and that is responsive to your request. Always keep in mind that agents may have their own interests in mind. So it is important for you to have someone you can trust to look out for your best interests. That could be immediate family members, or a lot of times the lender as well, because essentially the lender they want to make sure that you are able to buy a property for what it's worth. And what this was happening a lot in the past couple of years is because the market was more a seller's market. A lot of people were offering way more than the property was worth. And the reason why that matters, or it could be not a good thing, is because if the property does not appraise, the lender is not going to lend you money to buy the property. So if you are buying a property for more than what is worth, and depending on what you have in the contract, and I'm going to go over like offer to purchase and purchase sales agreement contracts, basically it will be on you to come up with the money to pay the difference. And if you don't have the money, you are essentially putting the deposit that you give at risk. So always keep in mind and essentially be your own best advocate when you're trying to go through the process of buying a home. The next one is the attorney. As you progress with the home buying process, it is important to remember that you will also need to work with an attorney, whether the attorney is somebody that the lender hires or somebody that you also hire to help you with the first part of the transaction. At HUECU, we have a variety of attorneys who we work with who have also transparent closing costs, because we want to make sure essentially the attorneys that we work with, we haven't agreed. Essentially, we want to make sure that our borrowers are not paying more than they should be paying for the transaction. Your realtor will also have a list of attorneys they work with, but it is still essential to make sure that the fees and costs associated with the attorney are clear to you. So make sure that you always get everything in writing. The cost of negotiating the purchase and sales agreement contract is usually outside of any closing costs that may be disclosed by the lender. And some attorneys may not charge you anything depending on the work involved to help you with this part of the transaction. we highly encourage our borrowers to not get overcharged. So if your closing attorney quotes you a fee that is lower than the roughly estimated amount that we have provided as part of your application, those are the fees we're going to use when it comes time to complete your transaction. So we're going to use whatever the lower fees are that have been quoted to you, because essentially the attorney is the one that's going to manage all of the funds for the transaction. The attorney you choose will be an important part of your team. And you want to make sure that the attorney you hire is somebody that you trust. Can we go to the next one?
Sure thing. It's a
Thank
little
you.
past half the hour. Just wanted to, anyone who has questions, please put them in the Q&A section and we'll answer those at the end of the webinar.
Okay, so let's say that you found a place. So every state has their own process to purchase real estate. And the process is similar from state to state, but today I'm going to focus on how it works in Massachusetts. Massachusetts has a two-step process for purchasing real estate. The first step is the offer to purchase. Once you have found a property and are ready to make an offer, your agent will be the person who helps you in the preparation of the offer to purchase document. Your agent should be diligent in presenting the offer to the seller's team and on making sure that you receive a response back from the seller's team in a timely manner. So they should have a deadline in place by which you expect to hear back. Essentially, whatever you wish to have happen as part of the purchase transaction should be listed in writing on your offer to purchase document. The document should list the purchase price, your intended down payment, your intended closing date, and any contingencies you wish to have listed on the document, such as a home inspection contingency, a finance or mortgage contingency, and appraisal contingency. And if you're buying a condominium, you should also have a request to review the condominium documents that detail the condominium finances, any requirements, etc. The offer to purchase document is a legally binding contract and is only legally binding when you and the seller sign it. Once the seller accepts your offer, you will be required to give an initial deposit. Typically, the deposit is approximately $1,000. After that, the next step is a purchase and sales agreement. The purchase and sales agreement is similar to the offer to purchase, but has more details on it, with every aspect of the purchase transaction spelled out. And this is the part where you may want to hire an attorney to help you complete this process, to make sure that your interests in the transaction are protected. The purchase and sales agreement document is also legally binding and it's a contract, but it's only legally binding when it's signed by you as a buyer and the seller. You will be required to give a second larger deposit once you sign the purchase and sales agreement. Usually the total deposit is anywhere from 5% to 10% of the purchase price, minus whatever you gave at the time of offer. So if you gave $1,000, it would be 5% minus the $1,000. So overall, it's like a total amount. After you have the accepted offer, after you have done the inspection, and while you wait or going through the process of negotiating the purchase and sales, then you want to submit a mortgage application. The only time you want to submit a mortgage application is when you are sure that you will not be changing your mind on purchasing the property. And this will help expedite the processing time on your mortgage transaction. The application process is very involved, no matter the lender you choose. And there are a lot of moving pieces and a lot of information will be required from you, which is why preparation is key. Learning as much as you can about the process like you are doing now by attending this workshop and having a positive frame of mind, as well as having the right team on your side, are very important. Once you choose a lender, a loan product, and submit your mortgage application, the mortgage interest rate is usually locked for a set period of time. The lender will provide you with an official loan estimate. The loan estimate indicates the terms of your loan, the projected payments, and the closing costs associated with your transaction. You and any other applicant on your transaction will be asked to provide applicable supporting documentation. You should aim to submit most of the documentation that is asked of you within 5 to 10 days from the day that you submitted the application. The lender will also order the appraisal with a licensed appraiser. The appraiser will need a copy of the signed purchase and sales agreement to complete the appraisal report. Once a decision is rendered, your mortgage application has been finalized. So essentially, once an underwriter renders a decision on your application, there are two ways that the lender will inform you of this. You will either receive notice of adverse action or a mortgage loan commitment letter. Typically, if you have gone through the pre-approval process with a reputable lender, your chances of getting a commitment letter are significantly higher than someone who did it. A mortgage loan commitment letter confirms that your lender will provide you the funds that you need to purchase the property. This document is the proof that you need to confirm that you have met the finance contingency listed on your purchase and sales agreement. After any approval conditions are satisfied, your mortgage file will be cleared for closing by the mortgage underwriting team. And the closing attorney is notified to prepare your file for closing. A few items you may want to keep in mind while going through the application process are: the loan estimate document can be used as a comparison tool to shop for the best loan products that will fit your needs. The loan estimate document is just that, an estimate. Towards the end of your transaction, the closing attorney will confirm the actual cost for which you will be responsible for in order to finalize your transaction. Closing cost refers to the charges, fees, prepaid items, and escrow deposits that you will need to pay in order to finalize your purchase transaction. The supporting documentation that the lender will request in order to render a decision on your transaction typically include a copy of the accepted offer, a copy of the purchase and sales agreement, proof of income documents, and proof of sufficient funds to close. If you are receiving a gift to cover your down payment, the gift must come from an immediate family member and must be deposited inside one of your asset accounts, savings, checking, etc. It must be there at least 15 businesses before your scheduled closing date. Make sure to pay attention to your RELAC period. Your transaction must be finalized before your RELAC expires. Otherwise, you can lose your rate or may have to pay a fee to extend your RELAC. Make sure to inform your lender of any special circumstances that may apply to your transaction and which could potentially delay your application process, such as the property you are financing is in a construction or a condominium conversion, or that you or any other applicant will be traveling during the application process, etc. Try not to make too many transfers between your asset accounts during the application process because everything will need to be verified. Hold off on applying for new credit or obtaining new debt until after you close on your mortgage transaction. Please know that there may be more documents needed from you or the seller side after the commitment letter is issued. Be diligent to submit these documents as soon as possible. You can go to the next one, Dominique.
All right, at this point, we have about 15 minutes left. We do have a question in the Q&A section. Would you like to answer that now or
Sure,
towards the end? But we have, okay, someone put, I'd like to clarify a basic question. Is the percentage rate on the mortgage either 1 and annual percentage rate, or 2, the percentage paid over the whole term of the mortgage. Again, we have about 15 minutes left.
So there's two differences. The interest rate is what you will, like, what your mortgage payments are going to be based on. The annual percentage rate, the APR, is to give, basically the purpose of that is to give you an idea of the overall cost that it may cost you to buy the property. So it may not, typically the APR is higher than the interest rate that you will pay for a mortgage. And if you want, Dominic, if you want to get the information, I could email them more detail about the difference between APR and an interest rate. But they're not essentially, they're similar, but not the same thing.
Sure thing. And you can also email Daisy if you have any questions. Yeah, we can continue on if there are no more.
Okay.
But I can send them your email while you continue. We have about 12 minutes left.
Sure. So we could go to the next slide. I already touched upon this one. We could go to the one that's for the closing. Okay, so your mortgage application has been, and a decision has been rendered on your mortgage application. You have provided any documents that were needed, and your loan is clear to close by the underwriter. At this step in the process, we're going to go to the closing. So the closing attorney is the one that's going to set the time for closing. You will receive a document that is called closing disclosures. Essentially, it's a package that you will receive. And in that closing disclosure package, there's going to be a final accounting of all the costs associated with your transaction. Typically, you will receive this document no later than 4 business days, including Saturday, prior to your closing date. Make sure to compare the costs listed on your closing disclosures against the most recent loan estimate you will have received from your lender. All of the applicants on the transaction will need to acknowledge receipt, basically acknowledge that they have received these documents at a minimum 4 business days before the scheduled closing date. The next step will be the walkthrough. This step is something that you will complete with the help of your agent. Typically, the seller is not present for the walkthrough. It's just essentially it will be something that you do with just the buyer's agent. And a walkthrough is the last milestone before finalizing the purchase transaction, where you as the buyer will visualize and basically inspect the property to ensure that what you are buying is substantially in the same condition as when you first view the property. Can we go to the next one? And this is essentially the mortgage roadmap. This roadmap breaks down how the mortgage application process unfolds from beginning to end. I know we have provided a lot of information here today, and understandably so, you may have some questions, which is why I highly encourage you to schedule an appointment with a home loan expert, myself included, so that together you and the loan expert could come up with a plan of action so you can successfully take your goals to becoming a homeowner from a dream to a reality. And now I'm going to turn it over to Dominique, who will provide you with some last minute helpful information.
All right, we do have one more question in the chat. I'm not sure if you wanted to answer that one. And one is, how much can having large savings or making a large, more than 20% down payment affect your ability to get a mortgage with a higher DTI percentage?
So depending on the loan amount and the type of property, so essentially depending on the risk involved, the more skin you have in the game, which is essentially a larger down payment, the easier it might be for you, if there's any exception that needs to be made, for you to be able to potentially have an exception granted. Obviously, again, everything depends on the type of property, also your credit rating. So if having a large down payment or a lot of assets may be a compensating factor for the lender to allow potentially a higher than the standard debt to income ratio.
Okay, thank you so much, Daisy.
Of course.
I wanted to remind everyone also that in a couple of weeks, we're having the home buying, virtual home buying forum. And of course, Daisy will be a part of that. And you can sign up. We still have a lot of slots left, and that's at huecu.org/home-forum. Wait, I think I have another question. Oh, someone just thanked us. Thank you. And so please feel free to join us doing that home buying forum. Also wanted to let you guys know if you have any, we have a lot of different products, and you can look at those different products at huecu.org/home-loans. I'll put that in the chat as well. So please feel free to, I'll put the survey. We also have a survey at the end. Let me type it. So you can basically look at all of the different services that we have to help you on your home buying basically journey. I'm on that journey as well. And some days it can be very challenging. So I'll put that in here so you can look at the different products that we have. And not just Daisy, we have a bunch of rock stars as far as MLOs. They're Helen, Michael, Ryan, and Sharon. So any of them can assist you as well in your home buying search. So you can, just reach out to any of them. Their emails are at the bottom of their names. So they're here to help you in any way that they can in terms of answering any questions, because you have a lot of them. I know I do as well. And I put that in the chat, but our survey at the end, if you have a few moments, just please take part of the survey, huecu.org/survey. And don't sue us. We're just here really to provide just a generic, broad picture of what it takes to buy a home. And of course, everything is specific to your needs, and you can reach out to someone who's an MLO, such as Daisy, to participate, to kind of let you know what you need to do to get to the next step to being a homeowner. And of course, stay in touch with us at huecu.org. Follow us on any of the social media as far as Instagram, Twitter, Facebook, and we have a lot of different webinars on our YouTube channel, and that's my HUECU on YouTube. And of course, this will be on our YouTube channel, I think probably the next couple of days. Definitely by Friday, we'll have this up for you. So in case you missed anything and you wanted to just kind of say, hey, let me see, because it's a lot of information, right? And it's just a lot to cram in an hour to just kind of let everyone know what's happening, who's doing what. So again, thank you so much for joining us this afternoon. Daisy, you're a star, you're a gem. Thank you so much for sharing your knowledge. You probably need to catch your breath at this point. It's just a lot of talking, a lot of information. So please feel free to watch this on YouTube on my HUECU. And have a great afternoon, everyone.
Thank you, Dominique, and thank you, everybody.
Thank you, everyone.